What is the most obvious phenomenon in modern life that to you would be very interesting to apply a behavioral economics sort of philosophy to?
Well, right this minute, I think the minuscule volatility in the stock market. Not that I have an explanation for it, but it's certainly puzzling, and it's puzzles that always attract my attention.
So there's less volatility in the stock market, and yet stocks seem to be going higher. Do you have a behavioral explanation for this, or anything that might help the Federal Reserve in its decision making?
Well, I think there's, I guess I would use Sherlock Holmes' strategy of listening to dogs not barking. I mean, we seem to be living in the riskiest moment in our lives, and yet the stock market seems to be napping but being pushed up by some snail. And I admit to not understanding it, but it's something, if I was a young behavioral economist, I might put my attention to.
Why is low volatility puzzling?
Because I don't know about you, but I'm nervous, and it seems like when investors are nervous, they're prone to being spooked, and nothing seems to spook the market. As you said, it just crawls up slowly but surely, and if it's all based on the expectation of some big tax cut, surely investors should have lost confidence that was going to happen, given what's happened so far out of Congress.
I mean, you've shown how human weaknesses such as a lack of rationality and self-control can ultimately affect markets. Is that what's happening here, or is there another explanation?
I mean, I'm speaking off the top of my head, but psychologists have long talked about animals either freezing or running, and it seems like investors are in freeze mode.